So, I'd like to tell a bit of a story at this point. So we differ versus a lot of other gold-backed tokens on the market in the sense that we came from it not to build a better currency or another US dollar backed by gold or silver. We came from it from a, Gregor and Brian came at it from a vault operator perspective. So they knew exactly what it takes to have gold in a vault, what fees need to be respected, and how much that costs, and what should be a relevant number to use. So what we did is implement into our token a storage fee of 25 basis points. So that's the 0.25%, as well as a transfer fee of 10 basis points to 0.10% every time someone moves the token around, and a redemption fee, which is currently at 15 basis points, 0.15%, sorry, when you turn cash flow tokens back into physical gold. And these
So,
all account for the logistical costs and fees.
so is that taken off of the top of your total, or do you pay that at the end in USD? How do you pay those fees?
So because all the fees are on chain, nothing is done off chain. Although we can whitelist addresses and process payments off chain, all of this is fundamentally done on chain, which means that we can only actually withdraw these fees on transfer events. So if you hold, say, 10 CGT for a year, after a year, you'll only be able to wire out or transfer out to a friend, a colleague, or even to us, 25 basis points less than that, minus the 10% transfer fee. 25, sorry, basis points, yes. Sorry.
Mm-hmm. So there's also another section that I was seeing on the website that is an inactivity fee. What is that?
Correct. So if a token is held in one address for over 3 years, we put a 50 basis point inactivity fee on top. We pretty much set this up to stimulate the transferability of the token, so having people transfer it more and use it more, essentially as a token. And it also covers our storage fees for the course of the last 3 years plus.
Mm-hmm. So how do people use it to transfer between themselves?
Well, it would be used as any other currency could be used, right? So if you're in the crypto world, often when you exit a position, you exit into, say, USDT or into Ethereum or into Bitcoin, and then what you do with that is fundamentally up to you. But if it was, for example, to pay for coffee in a coffee shop that accepts Bitcoin, why not use a gold-backed token? The volatility in the price is a lot lower. You kind of know what you have, and it definitely does, at least personally, feel safer to hold gold as a store of value than it would be to hold something a lot more volatile, say Bitcoin, even though that would have been pretty nice in the past couple of weeks.
True. So when we think about the use case scenario for this token, could you actually, buy a coffee with it? Would you need a retailer that is set up to accept any ERC20 token?
So there are retailers that accept any ERC20 token, but fundamentally these bridges between crypto and fiat currency always require some sort of regulated entity in between. So most centralized exchanges and payment providers are that bridge. And each time we want to be onboarded onto an exchange, we need to provide liquidity, so make tokens available to that exchange for them to accept our token, trade our token, and then mitigate their exposure to our tokens with others. So we're always working actively on getting listed on more exchanges. So currently we're already listed on Bittrex, on Bithum, on NBX, which is the Norwegian block exchange, as well as a number of decentralized exchanges. And if any one of these does have a payment gateway for, say, a coffee vendor, then yes, by all means, use CGT.
Mm-hmm. So can you use fractions of a CGT to pay for things or to transfer?
You can. So CGT is fractionable down to 10 to the minus 8. So that's 8 zeros after the decimal point of 1, right? And knowing that 1 CGT at the current price is 58.10 US dollars for 1 CGT. So 8 decimal points before that is the limit of fractionalization.
Mm-hmm. So why hold cash instead of, let's say, buying a gold ETF or another product like that?
So I'm always trying to draw lines between traditional financial products and new decentralized financial products, or even centralized but new financial products. Cash gold tokens, like I said earlier, only do two things. They turn physical gold into tokens and tokens back into physical gold. And if you want exposure to physical gold without having to worry about a vault, about storage, about all of that paperwork and the hassle of dealing with something physical, or if you don't want to hide it under your mattress at home, then CGT might be a great way to get exposure to physical gold, essentially, which you can redeem at a later stage. The gold ETF or the GLD ETF, which is a better known one, does offer redemption, but you have to have an obnoxious amount of holdings, and you usually have to be a registered entity. And it's quite complicated, so not quite as simple as just the online shopping version we offer. And we also have lower storage fees. The GLD ETF is 40 basis points per annum, and we're at 25.
And just to kind of go over those fees again, that's half of 1% per year for storage fee, right?
For us, it's a quarter of 1%.
Oh, okay. So very, very minor, negligible amount to use and
negligible, and to get those sort of storage fees in a vault that you hold physical gold with, you would have to be a substantial owner of gold. They wouldn't do that for a 1 gram bar. The fees would be a lot higher just because you're one client which holds 1 gram, which needs the entire security of a regular vault for something that's worth $50.
So Karim, I want to kind of go through conceptualizing this again. Let's say you had a 1 gram bar that you wanted to deposit. So if you transferred that in and then you got 1 CGT in return, can you transact with the CGT against the gold that is in the vault?
We don't take 1 gram bars in order to keep the premiums pretty much leveled across all. We only deal with 100 gram and 1 kilo bars. Quick side note. Just to make sure that there's no premium arbitrage and people don't try and tokenize 1 kilo bars and then redeem 1 gram bars, where the premium is usually around 30% as opposed to the usual 2.5 on, I believe, on 1 kilo bars. And when you said, can you transact against, I mean, can we use the CGT the gold that's stored with us for anything else? Is that what you meant?
Well, no. If you have the gold there, are you exchanging the gold that you transfer in for the token?
Correct. So you are essentially trading in the gold for a fungible vault receipt. So we give you the proof that we hold your gold in tokens. And then you can, divide those tokens in two. So if you had 100 tokens, for example, you can, sell 50 on an exchange, then buy another 50 again, and then redeem those 100 tokens for a bar in a different country, different size, whatever different brand, different purity, whatever you like, really. It's I know these words get thrown around, but essentially it's a pool allocated system. So we allocate gold that backs the CGT, and the CGT gives you right on the pool that we hold. Currently, we actually just surpassed 100 kilos in vaults and storage around the world. So we have 100,000 CGT floating around the world.
And again, it is redeemable at other locations around the world. So in a way, it's a far more portable form of gold.
It is 100% portable form of gold. It's like I said, they came at it from a vault operator's perspective, and it's got applications in both B2B and it's also got applications in B2C. As an individual, you want to explore physical gold temporarily whilst you get on a plane and move from Singapore to Dallas, and then you want it back in physical at home. You can do that. You can also be a bullion dealer or refiner that doesn't want to ship 10 tons of gold from Singapore to Dallas, and also knows that there's a refiner in Dallas that wants to do the same thing in the other direction. So you can just net out in CGT and only ship the remaining, say, 3, for example, that actually need to be shipped over.
Right.
So there's a sort of green initiative there too.
How does cash work versus other stable coins like Tether, and how do these coins get issued?
We just had a conversation about this on another podcast last week. So we don't like to poop on Tether too much, but we do. So Tether is a stable coin, which means that fundamentally it should be backed 1-to-1 by a US dollar or a US dollar equivalent. US dollar equivalents are usually money market funds. What Cash Gold does is we say, well, one token is backed by 1 gram of pure gold, not gold equivalents, not gold that's somehow being used as collateral for another loan. No, it's locked in. It's only used for one thing. That's to issue the token, which now you can buy or anyone can. What Tether
And again,
and
you can go and audit that and see every single bar. You can actually see a physical picture of every single bar.
You can see a physical picture of every single bar, and just like all things on the Ethereum blockchain, you can see exactly where every token you have came from and where it was before that. And fundamentally, it always got issued by us at our gram chaining event. What Tether and what a lot of other stable coins or asset-backed tokens did is they built a system where they can issue tokens without necessarily having the backing, and they can also encumber the backing for loans which are not necessarily money market bonds, certain money market funds or US dollar equivalents. So maybe a stable coin that you're holding is supposed to be worth $1 USD, and it is because it's widely used that way and the market determines the price. But if there was a run on USDT, say, or they suddenly had to sell a lot of their assets because, say, the crypto prices were crashing, then maybe not everything that's supposed to be backing it is there. Quite likely not everything that's backing it is there. Their audits, I believe, are every 3 months for what should be backing it. So it gives you a bit of a broad breakdown of what backs the actual every single USDT. And like we said, ours is immediate. So if you were to bring a bar of gold and have CGT issued, it would be reflected on our Explorer instantly. That's how it works.
Mm-hmm. So will the price of the tokens follow the price of gold, or is the token, basically a price representation of the price of gold?
So it will, because it's backed entirely by physical gold. The value should be that of 1 gram of pure gold. But market inefficiencies being what there are on decentralized and centralized exchanges, not all of them are quite as connected as the traditional financial ones are. We market make. So we make sure that they're always open and buy and sell orders on all the exchanges we're listed on, and make sure that we buy and sell the token at the current gold price. Ideally, when we grow big enough, the arbitrage opportunities will reveal themselves to enough people for us not to have to market make anymore, because these $1 discrepancies will be spotted and taken advantage of fast enough for us not to have to worry about the fundamental price of the token or the kept price of the token. But it's also possible that down the line, we become popular enough that the flexibility of physical gold on blockchain becomes more attractive than physical gold. And maybe our token would be worth a bit more because, well, it's pretty cool that you can, just have 1 gram instead of a full bar and pay with it at locations. Maybe that convenience has value. And if it does have value, the market should reflect that at some point.